Hey guys, welcome back to the channel. In this example, I'll show you guys a pairs trading strategy using intraday data for stocks. So I created some functions to collect the data from my SQL database where I keep my intraday data. And for the intraday data, I use either AlphaVantage or bar chart. For this tutorial, I am going to use bar chart's intraday data. There's a few requirements for this tutorial. First is that you guys have to have intraday data, and number two is getting volume data, because I will be filtering stocks based off of their dollar volume. And if you don't have intraday data, you can use daily data from Yahoo Finance. Everything will be the same process except for the actual data itself. Alright, so we are going to require a couple of packages. For now, I just need quantmod and ODBC. And then I'm going to run these functions. So here I've connected to my database. Now what I'm going to do is I'm going to fetch all the unique tickers available in my database. And the functions here are just to fetch the data and then transform these into XTS objects so that I can use them in R. So for fetch data, it's just exactly that. I'm just fetching the open, high, low, close volume data for a particular ticker. And then my reshape function will just convert it into the specified time frame that I want or need to use. In this example, I'm just going to use 30-minute bars, but bar chart offers 1-minute data. So in my database, I have 1-minute data that I can transform into lower frequencies. And then here I'm just connecting to my database. I save my password in an environment to keep that private. And in this line, I'm just sending a query to get the unique tickers. Alright, so it returned approximately 8,000 unique tickers. I'm going to disconnect from my database. And then the time and force that I will be using is 30-minute to get 30-minute bars. I'm going to use a filter, and I want to filter out stocks with low dollar volume. Alright, so in the previous video I showed you guys how to calculate volume for filters, and this is where we are going to require that. So for our volumes, I'm just going to call my list of volumes that I keep. And I save these as RDS files. So here, so this is what your volume data should look like based on the previous video. Alright, and just to make sure these are numeric, I'm going to use sapply to convert dollar volume as numeric. And then if there's any NAs, I'll want to set those equal to 0. I'm going to then slice the volumes into quantiles by running quantile. Dollar volume. Probabilities will be a sequence from 0 to 1 by 1%. NA remove, I'll set that equal to true. So here are my quantiles for the dollar volume. So we'll do dollar volume greater than 90% or the top 10%. So to extract the top 10%, I'm going to store these in ultra liquid by running subset vols dollar volume greater than or equal to levels 90% or my top 10%. Next, I'll extract the tickers by running as character unique, ultra liquid, symbol. So that leaves us with almost 1900 different tickers. Alright, so my next filter will be price, but for that I need to run get quote, get the latest quote. And I'm going to subset more than. So if the latest price is greater than or equal to $10, and also if it's less than or equal to 25. Since I will be shorting these, I want to set my price range between $10 and $25 per share. So then that shortens our tickers to 335. So I'll extract the row names. That's just to make sure that I actually have data for it. So let's take a look at noms. I want to get rid of a few ETFs that are in there by running this line. So I want to exclude these tickers from my character list. I'll clean up my global environment a little bit. Alright, so now I'm going to group tickers by sector by running unique, do call, rbind, apply, list files. Here I'm just setting the path where I keep my sector and industry data. Full names, set that equal to true. I'm going to read RDS. So I have a video on how to get this information. So we are going to use this list. So now I'm going to trim down my sector data frame by just pulling the tickers that I need by running SEC ticker in noms. So that gets rid of a few more tickers, which were probably ETFs. Next, I'll just extract the unique sectors. Which gives us 11 different sectors. Alright, so now to actually group them, I'll run apply as list, pass in the sector, function x as character, subset sector equals paste x ticker. Alright, so here I'm just going to pass each unique sector, and then I'm going to group all the tickers that meet that sector. So I'll go ahead and require PB apply. Go ahead and run that line. All right, now go ahead and run that line. So now I have a list of tickers belonging to each group. So that's for basic materials. Group 2 will be industrials. Group 3 will be healthcare, and on for each and every sector in here. All right. So now I'll make a new environment. I'll make a new environment so that when I calculate the spread of a pair, I'll save that spread in this new environment so I don't have to calculate it again. My time and force will be 30 minutes. So we'll run these two lines. All right, guys, so now I'm going to build a function that's going to pass in each group of tickers. I'm going to calculate combinations of tickers to get different pairs, and then I'm going to test whether or not those pairs are mean reverting, and then I'm going to save that spread into this new environment, and then we'll continue from there. So we'll give this function a name called getPairs. Here I'm going to pass in the tickers. So just to make sure this is working correctly, I'm going to pass in the first group of tickers, which are my basic materials. So I'm going to calculate different combinations of tickers by passing in the tickers, and I only want 2 to get pairs. We'll take a look at N. Here we have combinations of tickers that we will be using for our pairs trade. I'm going to transpose that list. I'm also going to NA omit. Here I'm going to store the number of rows in that data frame. So there's 210 different pairs. All right, so here I'm going to actually make the calculations by running PBL apply as a list 1 through the number of rows function. That's I for iteration. So what I'll be doing is iterating through each pair and then making calculations. So again, to test it out, I'll set I equal to 1 for my first iteration. So this will be for my first stock. That'll be for my second. So my first stock will be AA, and then the second stock for my pair will be ABT. All right, so now I'm going to call in my database to get the data for these two stocks by running merge XCS, close of reshape. A minutes will be my time of force, which was 30 minutes. Do the same thing for the second stock. If you don't have intraday data, you could always use daily data, and then you could call these from your database, which I have videos on how to do that. So we'll go ahead and run this line. All right, so for hours, I think that package is Lubridate. We're going to require Lubridate. We took a look at RETS1, and we see that our data is separated by 30 minutes. We have the closing prices of these two tickers. Since we do have some NAs, I'll just carry the last observation forward by running this line. Rename the column names of RETS1. We could do G sub. We'll just remove close. so now for my first asset, going to extract the first ticker, and then asset 2 will be my second ticker. The whole reason why I merged these two together was that so my index lines up and we have the same number of rows. So now we'll run the regression by running M, linear model, asset 1, tilde, asset 2, plus 0. We'll extract the beta by running coefficient of M. So our beta is 1.07, which means in order to predict asset 1, we would need 1.07 shares of asset 2. Right, so now we're going to calculate the spread by running asset 1 minus beta 1 multiplied by asset 2. We're going to change the column names of the spread by running paste A, B, which are the ticker names, collapse by a hyphen. So I'm going to paste the ticker name separated by a hyphen for the spread. Here I'm going to apply it. So this is our spread plotted. So like I said, I will be saving the spreads into that new environment called E. And how you want to send spreads to that new environment is by running assign. We have to assign it a name, so we'll give it names of spread. What do we want to send is the actual spread, and what environment? Environment E. So we'll run that line, and now it's sent to E. So if we run E, $, and it'll give us a drop down menu of all the spreads that we have currently in there, but for now we just have one spread. Alright, so now we want to test if that spread is actually stationary. So we'll run suppress warnings, ADF test spread alternative is stationary, k equals 0. I want the p-value, and I run this silent, set that equal to true. Right, so in order to use this function, we need to require a t-series. So we'll run t-series. So we'll run that line, check out what p is. So it couldn't actually calculate the ADF test because there's NAs in our data, and I'll leave it like that because I don't want to really extrapolate data that I don't have. So in future iterations, it'll only calculate it for those pairs that actually have data. Alright, so if it does not inherit any errors, then I want to return as data frame alt C bind, paste my first ticker, second ticker. I'm gonna round beta 1 to 4 decimal places, round my p-value to 4 decimal places, and then I'll set strings as factors set that equal to false. Alright, so if it doesn't encounter any errors, I'm going to combine the first ticker, second ticker, the beta of it, the p-value, and then I don't want these saved as factors. Alright, so that's for the first part of it. Since I'm going to pass in groups, after this calculation is made for all the pairs, what I'll do is I'll remove any empty items in my list by running lapply dd length greater than 0. Next, I'll combine these by row by running rbindList dd. In order to use rbindList, we need data table, so we'll require data table. We can use do call rbind, but since these groups may be kind of long, I'll just use rbindList to make it faster. Set the column names to asset1, asset2, beta1, and the p-value. Alright, so I'll make the p-value as numeric. I'm going to subset all the pairs where the p-value is less than or equal to 0.0125, because those are the most statistically significant. Next, I'll order pairs 2 by p-value. Next, I'll combine pairs 2 with the sector by running as data frame sec. I'll set this equal to I so that I know what sector this pair belongs to, and then rename that fifth column to sector. Finally, just return pairs 2. Alright, so we'll run the first group just to see what this looks like. So I'll pause this video and then I'll get back to it when it's done running. Alright guys, so it looks like it took approximately half an hour to run the first group or the first sector. Alright, so now I'm going to extract complete cases. Alright, so I'm going to rbindList, change the column names, make p-value as numeric, and then I'm going to extract values that have p-value less than or equal to 1.25%, and store that in pairs 2. So now we have 11 observations. Next, I'll order them, combine pairs 2 with its sector. So here we'll take a look at pairs 2. And then after we combine them, we should now have a column with the sectors. So here we have our pairs, the first asset, the second asset, the beta, and then its p-value. And their sector are all basic materials because they came from the first group. Alright, great. So now our function is good to go. Alright, so now I'm going to apply this function to our group list. Function so I'll store these in temp, wrap it in a try function, get pairs, silent, true, And if it does not inherit any errors, then I want to return temp. Alright, so I'll go ahead and run this. So this is going to take a while, so I'll come back when this is done running and we'll pick it up from there. Alright guys, so the process took almost 13 hours to complete for all the sectors. So what I'll do now is our bind list all the pairs together. So if we take a look at that data frame, now we have a combined list of all the pairs and their sectors. Alright, so what I want to do now is get the actual spreads that we saved in our environment called E. But first we need to calculate the spread names by running as list 1 through the number of rows in our data frame, function X. So I'm going to paste C PS asset 1 brackets X, so that'll get us our first asset. Then I'll copy this, change that to asset 2, and then collapse with the period. So this will calculate our spread names. And then we'll do call C spread names. Now we have a character array of our spread names. Alright, so now to actually extract the spreads, I'm going to use do call merge E apply E and merge. So that's going to get us all the spreads that are in my environment. And then I'll subset the spreads that I actually need by passing in spread names. So we'll run that line. Take a look at spreads, the first 5 columns. So now we have our spreads here. Alright, so typically for this trading strategy, you'll always be long and short an asset depending on where they are trading. And it's a mean reverting strategy, so if it falls too much, you'll buy the spread, and when it reaches a certain limit, say 0, you'll close them out. If it gets too high, then you'll short it, and then when it falls back to 0, you'll close it. But for this tutorial, what I'll do is I'll apply a Bollinger Band strategy. So what that entails is you'll have a rolling mean. If the spread goes over the upper band, I'll short the spread, and then I'll close it when it reverts back to the mean. And if it falls below the lower band, I'll buy the asset, and then I'll close it when it reaches the moving average. So we'll go ahead and stop the video here, and then in the next video I'll show you guys how to calculate that Bollinger Band strategy.